Thank you. And I understand there's a whole range of investors here, some of which don't know the W Resources story, and some who have almost studied it to death, but are very pleased with the latest share price and tungsten price increase. So I'll make sure I give a good, thorough overview of what our fundamental assets are, and then I'll, for some of the more technical issues or more precise issues, I might leave that for questions. This is our current facility in Spain, in La Perla. La Perla is our major asset, and that's the one I'm going to spend 90% of my time talking about tonight. Okay, just in terms of our assets and where they are, we have a focus on tungsten. I'll talk a little bit more about tungsten, but tungsten's the world's hardest metal with the highest boiling point. It's very scarce. It's used in a whole range of industrial applications and military applications. And the price has increased very, very substantially in the last 6 months. It's gone from about $225 to $335. So that's a very nice increase, and I'll talk about why. Our assets, La Perla is the big one. We're going to move from that current plant, which I showed you, to mining 2 million tonnes per annum of ore to produce 2,700 tonnes per annum of tungsten concentrate, and we also produce tin. That's the big one, and that's the one that's going to make a big difference in terms of financing development, particularly over the next 3 months and then over the next 12 months to ramp up to that 2 million tonnes. We also have some other great tungsten assets. Regoa, northern Portugal, tungsten, high grade, quite significantly higher than La Perla, but it's smaller. We've made very, very good progress on all the approvals and also the design work for that project, and we're keen that we get a 1-2 with La Perla and then Regoa. South of Regoa is Tarouca. Tarouca is a great high-grade tungsten exploration project, about 20 kilometres from Regoa. We're going to find a way in which we can get that high-grade ore into the plant at Regoa and add to the profitability overall. Then, in the centre of Portugal, we've got some very good copper and gold assets. We have these in a vehicle called Copper Gold Resources. We've said to the market, look, people want us to focus on the W, on the tungsten, but we've got these really, really good copper and gold assets that we can build on, and we've announced to the market that we're going to look to spin off those assets to shareholders in a in-specie share distribution. So shareholders, if you own, say, 1 W share, you get 1 Copper Gold Resources share. So that's an important initiative that's also moving along, and I probably won't have much more time to go into that. This is La Perla, an aerial. La Perla is one of the lowest capital cost by a long way development tungsten mines in the world, and it's also very, very low operating cost. One of the reasons this mine is so low in terms of its capital cost is it literally sits right next to the main highway from Madrid to Seville or Madrid to Lisbon. So it's 5 minutes drive from the highway to the mine. All the roads are in place, all the infrastructure is in place. I'll show you a little bit of that in a moment. We have an operational tailings dam, so we've got processing plant there. We're feeding into the tailings dam. We can utilise that existing tailings dam in terms of our operations. So we've already got, from our investments and the investments of the European community, very significant assets at this site, which means it's a lot lower cost, $25 million to put this into production. I'll talk about the earnings that come from that $25 million a little bit later. This is just an example of where we are. So as I mentioned, we have open pits. Open pit mining is much, much lower cost. The veins in this ore body come right to surface, and the tungsten in the veins is in these quartz veins, and the waste material around it is very light shale. So this particular ore body is very amenable to gravity separation. Gravity separation, particularly when you've got coarse grain tungsten, is much, much more efficient and much more lower cost than some of the other operations around. So remember that. There's a great, while I don't forget, there's a great research report by Phil Swindon, ex-Anglo, ex-Rio, one of the top mining analysts that TPI got in to do some research. Read that, because that will give a very good description of why we've got such a low cost structure. So a lot of infrastructure is already in place. Tailings dams operational. Some people would spend $40, $50 million to build one of those. Gravity separation. So we have low capital costs because we can go from that mined ore with the veins outcropping at surface at high grade to the final product in a very simple processing circuit. We mine using open pit mining. Spanish mining costs are nearly as low as Chinese mining costs. Everybody thinks China cheap, Europe expensive. You do the numbers, Spain is a very long-term, low-cost place to mine. We take the ore, we crush and screen it. We've ordered that plant with Metso. Metso is the highest quality, #1 supplier of crushers in the world. And we've got a very good price and a very good contract with them. We then take the crushed ore, put it in a stockpile, run it through a jig. A jig again uses gravity to separate the heavy tungsten from the light shale. That jig gets rid of 55% of the mass and significantly concentrates the tungsten, so it's materially higher grade before it goes into the concentrator. And again, a concentrator is pretty straightforward. Spirals, centrifugal force and gravity, shaking tables, water going over screens with a bit of vibration. A little bit of flotation, and then electrostatic separation to separate the tin, which is a very good byproduct to have from the tungsten concentrate. So when people say, well, why do you have a capital cost structure of 25 million? Infrastructure is already in place, simple gravity process flow sheet. Makes a huge difference. Wanted to start with the picture so you have a picture of the project overall. Tungsten. Quite unique, very hard, can deal with extreme boiling points, huge uses in cutting tools and in the automobiles and the aerospace industries, huge uses just in construction. The tips on all those excavators in all those mega cities in China are all tungsten tipped. Anything where you've got to cut or drill anything very hard, tungsten. Tungsten price had a good run. We're doing a financing. Tungsten price has gone up by 71% since December 2016. When you're going into a financing and you want the confidence of the financiers and the understanding of the market, it's very good to have this kind of price increase. And look, I've been talking in some of these conferences about the scarcity of tungsten supply. I must admit I felt a bit stupid at some of them because the tungsten price was sitting here, sitting here, sitting here. But in the last 2 months, you've really seen the shortage of supply and the strength of global demand kicking in. And that's why you've seen this very steep rise in the tungsten price. Might trace back a little bit, but personally, and from all the analysis from the top players such as Argus, they see tungsten sitting above $300 per MTU, which is a price at which we make a hell of a lot of money. Tin's been good. We look at 20,000 as a good price. Tin's been as high as 40,000, so there's a bit of upside there. But 300 for tungsten, 20,000 for tin. That's a very, very good price environment for us. And while Europe grows, Asia grows, the United States grows, you've got incredible growth in industrial production, which is driving these prices higher. These are the forecasts of Argus, who released them, I think, on the 30th of May. They're out of date immediately. We used these in our feasibility study that we just released. So actual prices are well above the prices that we've used to justify the financing and justify the feasibility. The project. I won't go through all the gory details, but I'll just hit the highlights. So as I mentioned when I was showing you that ore body and that infrastructure and that process flow sheet, our ore is concentrated in these quartz veins. Around the veins is light shale. You run them through a gravity processing circuit, you get very good recoveries. That makes a big difference. this is a flow sheet that has run 7 million tonnes, not 7 kilograms, not 7 tonnes, but 7 million tonnes of ore through a processing circuit very similar to what I just showed you. We're just using the most modern process control system by some of the best players in the world. So very good geology, proven metallurgy. We're a low-cost producer. I mentioned the current tungsten price is $310 to $335. The price we get is 80% of that, which is on today's numbers is about $275 per MTU. MTU is 10 kilograms. Our cost structure is $94. So we're very low cost. I'll show you how low cost in a chart a little bit further along. Offtake, tungsten's scarce. You're seeing it in the price. You're also seeing it in the demand for the customers. We're very advanced in our offtake agreements. That'll be one of the things shareholders should look out for in the next quarters, because that's an important part of the whole picture in terms of the financing. But we expect to have very good, strong offtake agreements for 80% of our supply and at very, very good prices. Infrastructure's already in place, approvals are in place. Makes a big difference. We've got very strong government support in Extremadura. We've got top companies and we're making sure we're buying quality equipment from Metso, which is a big Finnish company that has plant in France and Portugal for supplying the crushers to us. All Minerals, one of the top German industrial companies, supplies huge amounts of equipment to companies all around the world, and they're our other big supplier. So we've got the A team in terms of the players in supplying this critical equipment behind us. And it's a conventional process. We're not trying to do anything. We're using modern, new process control systems, less labour, more automation, but very straightforward processing systems. Gravity separation. This is the timeline. I'll talk about this in a moment, but one of our big priorities at the moment, and there's a huge amount of work going on it, is arranging the debt financing. We announced about 3-4 weeks ago that we're going to raise $30 million US dollars. We previously indicated to the market it was 25, and there might be a little bit of equity that was required to complete the financing. We've talked to the US financiers, we've talked to the English financiers, and they're saying, look, this project's got the fundamental earnings capacity to carry 30 million of debt, and I'll show you some of the numbers later. From the debt financing to first production is 12 months, but we're also making sure some of these long lead items are progressing smoothly and quickly. So we're not going to get the money and then decide what to do. We're going to be up and running from day one in terms of access to the larger finance capacity. Approvals, really important. Really strong support from the Extremadura government. Those who follow the company know that the Extremadura government is offering us approximately 5 million euros in grants that will come in after the project's been built. They're backing us with approvals. We're well along the way in terms of procurement of the entire plant. I mentioned Metso, I mentioned All Mineral, and All Mineral's most likely going to get this contract as well, but we'll just make sure they're tough competitive terms. Metso's the leader in the world. We announced the crusher about 3 or 4 weeks ago. Top quality. All Mineral build very large plants globally. German quality supply, good logistics to deliver to site. They're committed to leaving a team at the mine site until we get up to the high recovery levels this project can deliver. Cost. Lowest capital cost, lowest operating cost. This is what they call a cost curve. So what they rank is from the lowest cost producers all the way up to the highest cost producers. It's done by Argus, which is one of the top analytical companies in this tungsten space. We're sitting down here in the bottom quartile of the cost curve. These guys are molybdenum producers, so tungsten's really a byproduct, so they look a little bit artificially low, but we are much, much lower than the rest of the industry. And that concentrate price of $200 per MTU, that was done about 3 weeks ago, so it's higher than that now. So we've got further buffer. So all these high-cost producers have to go out of business before we have any kind of financial issues with our cash flows. Very important to be on the bottom of the cost curve. Financials. This will probably be my last page. I'll spend a tiny bit of time on it. These are the projections that come from our final investment decision report feasibility study. We released a comprehensive summary of that 3-4 weeks ago. I think that and the increase in the financing to 30 million were to one of the very solid foundational reasons why we've had such a good run on the share price and much better appreciation of what the company can do and how close it is to the financing. This is revenue, so 3840. We have an expansion from 2 million tonnes to 3.5 million tonnes. That's well advanced. That kicks our revenue from around 40 million to around about 65 to 74 million. Large capacity. The EBITDA, earnings before interest, tax and depreciation, it's a measure of cash flow that a lot of financiers focus on. I said we were looking at 25 million of capital. What we're looking at is in 2021, we're up to an EBITDA on those more conservative price assumptions of around about 20-25 million of EBITDA in those 2 years. So when the financiers look at that, they see lots of cash flow coverage, not only to cover the interest or cover the interest and the repayments, but cover the significant, cover nearly all the debt in 1 year. And in our cash flow scenarios that have gone to the financiers, we're actually able to repay a large amount of the debt, or nearly all the debt, in 3 years. So that's where we want to be. So these are all measures that financiers look at. Leverage, that's the amount of debt on the assets. Interest coverage, year 5, we're covering the interest 13 times. Very strong operating cash flows. Public listed company, delivering earnings, delivering cash flows. That's what's going to underpin the longer term emergence of W Resources as a large scale or mid-tier listed mining company. Thank you.